What's going on? My name is Amy. Welcome to the channel. I am in month 5 as a day trader, obviously a beginner, and I wanted to cover what it's been like. I have done 122 day trades approximately, trading small position sizes. So I started this particular experiment back in the beginning of March, or actually second week of March or so. So it's been about 6 weeks almost. 6 or 7 weeks that I've been trading small position sizes. Now, some of the trades, when I say 122, some of them I was still doing full position sizes that weren't counted in that. And then beginning of, I think it was April, check my journal here, the beginning, middle of March. Yeah, middle of March was when I was like, okay, let's do only small position sizes. And the reason being was I've been studying Mark Douglas's work. So Trading in the Zone guy, very much based on trading psychology and like how we can improve our trading based on becoming like more robotic, more systematic, not letting these trading errors come up like FOMO, fear, greed, all the things that cause issues, right? And I put a link to the video that really changed the game for me, where he talked about 20 trades experiment. That's in my day trading resources, link down below in the description and the comment section. And you can just pop your email in there. You get access to all the people I've learned from, all the books, all the YouTube people I follow, everything that's gotten me to where I'm at right now. And across all of these trades, what my goal was in the beginning to not fear getting into a trade. And when I learned of Mark Douglas's 20 trades experiment, where he said basically you look at your stats over 20 trades. Don't look at like each individual one. Don't even worry if you go 10 zip, right? Like 10 in a row. Because he talked about the probability and the odds. Like if you sort of kind of know what you're doing by now and you have your strategy and you stick to your strategy, you just have to accept that you will lose. Like you are not going to win all the time. And in fact, he talked about, even some people that if they were below a 50% win rate, they could still be profitable because of the high take profits they were going for. And so he said, basically, don't worry about how many you get right or wrong. And even those words, just like, don't even think of it like that. And just go into the trade, keeping your parameters the same. So have the same, amount of shares or size that you're going to take, have the same stop losses, have the same, what are your go signals for entry and what are your like stop signals for time to get out. Have all that like planned out so that you don't have to think in a trade, really. You just kind of wait for things to play out and you execute. And within that first 20 trades that I did, like strictly, I was only trading small, that first 20 was only one share a piece. Throughout the 122 trades, it was like somewhere I did some 1 share a piece, 2 share a piece, 5 share a piece, 3 share a piece. There was some 10s in there. And I think I didn't count the ones where there was a couple of trades I took where it was like 15 shares, but basically 1 share to 10 shares. And that definitely happened in those first 20 trades where I stopped worrying about the fear of getting in the trade. And what I realized was that it was an egoic thing where I was worried I would be wrong. So it would cause me to hesitate, hold back, then jump in at the wrong time, And when I took away the kind of loss of money behind that and the don't worry about being right or wrong, it made it so much easier to trade and to just, follow the trade in real time versus worrying about the P&L, because I was trading like 1 share. So the most I might make maybe like, 50 cents a dollar. And I was only risking in the very beginning, I was doing a 75-cent trailing stop loss. And the stops were different throughout my 120 some trades. But the whole goal of trading small was, like I said, to get rid of that fear of jumping in trades, the fear of being wrong, and the money too, because I had taken, it seemed like a lot of losses before that where I was losing anywhere from $10 to $30 a trade. And it was starting to affect me psychologically. And I'm like, okay, I got to do something different because I want to really learn this and get really good at it without the fear of losing money. You can't worry about making money as you're learning this stuff because that just totally gets in the way. And Mark Douglas talked about that too. It's like, you just have to completely remove that from the equation and just focus on the trade itself. Focus on the process. Learn your strategy, get really good at one specific way that you trade, your favorite setup, whatever it might be, and stick to that, until keyword, you start becoming profitable. And so across all these trades, there would be segments where I would be profitable. And some of the 20 trade experiments I did, I ended in profit. And then I would, maybe have one where I was lost. But what I noticed was kind of near the end, and I kind of stopped trading super small last week. Near the end, I noticed I was getting a lot better at reducing my loss sizes. And basically that taught me that, hey, I'm getting way better at risk management. I wasn't letting the trade go completely against me to the point where it would hit my stop. And I would start getting out before that. So I mitigated a lot of the losses I would have, added up, like dollar-wise. And I started to see, okay, I'm closing the gap, right? I'm getting closer to that profit. Now, what I've noticed in probably the last 40 or 50 trades, I've kind of put this into a Google sheet and I'm still working on it. But what I've noticed is when I do take a loss, that sometimes is what offsets the wins, because the loss might be to the full stop sometimes, just sometimes it happens, right? And then today, for example, I'm trading and now I'm up to trading 24 shares a trade. So I jumped from, I was doing these, 10 shares, maybe up to 12 per trade. And I said, let's double it. And I had no issues, which was great. I had no issues jumping size. But yeah, looking back, I was like, oh, okay. I was taking these fuller losses and I'm trading and I'm winning some trades, but I'm noticing I'm quick to grab the profits. And it's like a fear on the different side of the scale, right? Where you're like, ooh, I gotta get it before the market takes it back, kind of thing. And I had learned from Best Loser Wins, he's a high stakes trader, Tom Hugard, and he always talked about adding to winning positions. And I did test this a little bit, but the way I'm trading right now is I'm just jumping into a full position size right away in my trades because I'm still wanting to keep specific parameters around what I'm trading. And if you start adding to positions, that kind of makes it not so systematic, right? Because you have to think, okay, when do I add, right? So I definitely think it's something worth pursuing as I get better as a trader to continue that path. But for right now, I'm trying to just keep it systematic, keep it robotic, not worry about it. And basically, the way I've been buying into my trades is I buy 2 sets of shares. I'll buy 12 with a certain stop loss and 12 with a different stop loss. And reason I started doing that was because I realized sometimes there was this range, where if I had too tight of a stop loss, I was out, get kicked out. If my stop was too wide, I might run the risk of having too big of a loss compared to my wins, right? So I kind of picked these 2 sweet spots. And as a scalp trader, I'm pretty much settled most of the time with a 15-cent and a 25-cent stop loss. And something I want to start doing next, because I noticed this bad habit of trying to grab before my take profits are even hit, is I want to try trading without a take profit order. So just having stops, but not the take profit, and try to let my trades run a little longer. That's something I need to definitely work on if I want to stay profitable, right? And across these 122 trades, I was negative, but I was only negative $20, $25. And there was just a couple of trades in there where, because I traded anywhere from 1 to 12 shares, like I said, there was a couple of trades where I'd hit a max loss, right? The total risk of the trade. And those couple of trades like offshoot every gain almost. So that's why I was like, okay, this is what I need to work on next. But I've noticed in like the last week or so, I'm starting to read the chart better, which is awesome. It's taken me, this is month 5. It's taken me this long to really start to grasp, the probabilities of looking at the chart and trying to figure out where is it going to go, and it's not so much like I'm trying to guess. It's just like, okay, excuse me, like look at this, see, based on the candles you're seeing and you've got, some indicators on your chart, but like, where do you think it's going to next? And today, I actually traded a little bit differently, and I'll share another video breaking down today's trades. But I'm actually kind of starting to see like support and resistance on my own without having to use all the indicators. You've been following the channel for a while. You've seen my charts sometimes have the Bollinger Band, sometimes I have the 9 EMA, sometimes I have the VWAP. I've got the stochastic oscillator down there. I still like having that on the chart because I feel like it's a helpful indicator to kind of realize, okay, the tide is turning. But I'm training my eyes, and I'm going through some courses. Like I got Day Trading Addicts course, Trade Win Profit it's called. I'm going through his course. I've been watching Chris Swaggy C. Williams. He's in my YouTube list on my day trading resources. Again, you can put your email in, get it for free. Been watching their breakdowns of the chart, and it's starting to kind of like make a little bit of sense, right? After all these months of like, okay, where's a good place to get in the trade? Looking at support and resistance, but without having to use all these tools. It's like, no, we're looking at candles. We're looking at, scrolling to the left now. I'm looking at the past. Today I was trading Tesla. I'm looking backwards on, I got it up on TradingView here. I'm looking like all the way back to Friday for some of my levels and stuff like that. And just little things starting to click. And what was so great about doing these 122 trades was my mind was more clear, and the ability to look at the charts without such biasness of like, am I going to make money on this trade? That really messes you up. When you're in a fearful state, it really shuts down your cognitive brain function. And all of a sudden, all you can think about is the P&L, right? So by trading super small, I wasn't worried about the loss of money. And that allowed me to open up my eyes and my brain to see other things on the charts. And for that, I'm so glad I've done it this way. I could have kept trading my normal, I was trading between like 40 up to like 65 shares a trade. Some trades like 25 shares, but at any rate, my risk amount was so much higher. I was losing, like I said before, like 10 to 30 dollars a trade, and it was just like, back to back to back. And for a little while, I tried trading like one full size trade per day, and then do a couple of small ones after that. And unfortunately, you trade that one full size and it's a loss. There's no way that the couple ones after that are going to make up for that. So that's why at one point I said, let's just do only small position sizes. Let's learn the strategy. Let's get better at actually learning how to trade before we continue this path. So what's next? Basically, I like the idea of scaling into things. So I tried the experiment on Friday just to kind of see like mentally, how is this going to affect me going from like my max size of like 12 shares a trade, to 24. And I was totally fine with it. It didn't like bother me. I actually took 2 losses on Friday, and because I'm minimizing my risk, and when I see a trade going against me and it hits my 3-strike rule, I'm quick to get out. Like I'm not worried now. I'm not holding back now thinking, oh, but I need to be right. The ego, right? That's not an issue anymore. It's more like, okay, protect your capital. Your 3 strikes are there, get out. So I took a loss on Friday, but it was like, it really just, it was like, whatever, And then today I was in profit, but like, I think, going forward, I'm in another 20 trades experiment. So I've done like 4 trades of this 20 with 24 shares a piece. My 2 stop losses, 15 cent and the 25 cent. And that's pretty much my parameters. So in a sense, it does limit me to trading certain stocks, because I'm not going to trade something that's, under $10 and try to take a 25 cent take profit or something. It's too far off. So I pretty much am just trading things that are somewhere between 25 up to like maybe $60 a share. Stocks and ETFs is all. But yeah, I'm just going to continue this path, finish out this 20, see where I'm at. That's when you evaluate. It's not a good idea to evaluate too deeply, like today and this week. It's like, no, look at the last 20 for true evaluation. Because like I mentioned earlier, you could have those 10 losers in a row and think, oh my gosh, I don't know what I'm doing. But then you could have 10 winners in a row. So don't worry, if you get into a funk or whatever, or even call it that, because you really got to look at more number of trades. And I've also found through this experiment of doing so many small position trades that it was better for me to only trade 4 days a week versus 5. That I needed 1 day away from the charts or even just 1 day not to trade, keep Thinkorswim closed, might have a chart up, but be doing like other analysis and things like that, and to not feel pressured to actually trade. Even better though, I think, is to be completely off the charts and completely off the computer for that 1 day a week. And of course, you have the weekends off, but the weekends I'm sort of planning and reviewing things. So I like having the day off, and it kind of gives me clarity. Like, I just feel better coming back the next day, and I think it's just a good idea for me to do it. So yeah, so that's pretty much what's next. It'd be great to keep doubling. But I got to also realize, okay, I need to be profitable, right? I need to figure out like, okay, number one, I gotta go for higher profit. I've been doing 1-to-1, so that's on me. I've been doing a 1-to-1 ratio of take profit for the most part. And I think I might start adjusting if I do keep buying in as a one cancels the other order on Thinkorswim. I probably, number one, I'm gonna try to go for higher profits, but if I have it in there as a 3-part order, buy in, take profit order, and a stop, that my take profit order is at least above what my risk is. Because yeah, if you're doing 1-to-1, I think the chances just sometimes it's like the odds sometimes are more so that you might hit the stop versus the profit, especially if you start panicking like, oh, it's going against me, or you just bail too early. And yeah, so that's kind of what I'm looking at for the next going ahead, and I'll keep you guys posted. But I also want to start sharing too, just some like trading psychology stuff aside from this experiment that I've like been working on, habits, things that I've implemented in my routines, like meditation, visualizing, figuring out my why behind trading, like setting goals and things like that, and just start talking about that more on the channel. So if you guys are interested in trading psychology, me personally, I just feel like that's the most important thing, because you can have all the strategy, you can have all the even just somebody sitting over your shoulder telling you what to do, but your internal psychology will prevent you from doing the right thing. Because sometimes you're telling yourself, oh, I don't know. Or you are in a rush to get out of the trade because you're like, I got to take what I've been given and run. There's just all kinds of things that we have to work on up here, right? So anyways, was it worth it to trade small for this many trades? Yes, absolutely. And I think there's a lot of people that are not willing to do what I did. It took some serious patience in the beginning, because when you're trading one share, you're not even that motivated, because you're like, oh, okay, money is completely out the window at that point. It's like, oh, I made, 25 cents, I made 50 cents. Like, it's not even a thing that's going to excite you. But on the flip side, it's not a thing that's going to worry you or make you fearful either. So that was something interesting I learned as well, was that when you're trading small, not only do you not have those emotions affecting you about fear in trading, but the excitement's not there either as much, because you're basically in a neutral state. And what does that mean? It's actually a really good thing. That means you can stay focused. That means you can be present in the moment, in the trade, And I think that that is actually, that mental state of equilibrium is way better than being like, oh my gosh, I'm in profit. Yeah. You know, and you're just like, ooh. And then the emotions that are heightened for a winning trade are also going to be heightened for a losing trade. So that's what causes people to blow up accounts or take unnecessary risks, right? Or revenge trade or all those other things. So anyways, guys, hope you enjoyed the video. Check out my day trading resources down below if you want to find out more from whom I've learned from so far. And I'll see you in the next one. Take care.